Hello everyone, welcome to the Financial Information channel. In this video I'm going to give you the information about an economic moat and what it means in the stock market. And I'm going to mention 5 ways that you can identify an economic moat in a stock. Now let's begin with the video. And the moat is having the advantage over other companies in the industry. And you know that you have chosen a good company when that company has an advantage over other companies in the same sector. And now I'm going to mention the 5 ways that you can identify when a company has an advantage over other companies. And one of the moats is having an intangible asset. And one of those assets can be brand recognition. And some companies do an excellent job of keeping those loyal customers in their database. For example, when Apple announces a new product, you know that the product is gonna sell well. The price of the products might be a little bit too high. However, since there are a lot of loyal customers, the products tend to sell really well. And the brand recognition can be to different companies, for example like Google. And just right now, you are watching this video on YouTube. And YouTube is owned by Google, which has a strong brand as well. So having that strong base of loyal customers pays off for those companies. And this is very similar in real life. For example, if you're a sports fan and you follow baseball, you're going to be watching your favorite team on the TV, or you're going to go to the stadium to support your team. And one of the reasons is that you identify with whatever team you support. And that is the first economic moat. Now let's go to the next one, which is patents. And patents is having an intellectual property protection. And one of the companies that I recommended back in June was OLED. Other companies might have the ability to create the same display as long as Universal Displays agrees to those terms. In addition, Universal Displays is going to receive an amount if they allow other companies to create those screens. Now keep in mind that Universal Displays might be the only one that can create those screens if they want to. And I'm going to mention one of the most popular patents in the stock market, and that patent is owned by Amazon. If you've ever been to the Amazon website, you know that you can purchase an item with one click. And the one-click patent was granted to Amazon in 1999. And like I mentioned before, Amazon had that option to allow other companies to use that patent. In the year 2017, Apple is paying Amazon to use that patent in the App Store. And that is the reason why patents are important. It creates a clear advantage. And the next economic or business moat is going to be the cost advantage. Now in this moat, we are going to go back to Amazon. And the reason we're going back to Amazon is because Amazon offers really low prices. And I'm going to put on the screen a graph where the customers begin their product search. And as you see in the screen, Amazon has a clear advantage. And from 2015 to 2016, the company has increased the product search by 11%. And like I mentioned before, Amazon had the history of offering products at a really low cost. And other companies have that advantage as well. McDonald's is another example. McDonald's offers fast food at a low price. And you have to remember that other companies have the low cost advantage in their favor. And another company is Walmart. Walmart dominated the retail business because of the low cost product. So that is another economic or business moat in the stock market. Now let's go to the next one. And the next moat in the stock market is having high switching cost. And the high switching cost makes the customers stay in their company. And some examples can be the telecommunication stocks. Let's say that you have a 2-year service agreement with a telecommunication company. And let's say that that company is AT&T. And let's say when you ended up signing up with AT&T, you ended up getting an iPhone. If you end up leaving that contract before the 2 years, you're gonna get charged an early termination fee. And usually you will be charged an early termination fee of around $350 for a smartphone. So that actually makes it hard for customers to leave that company for the competition. And that is another business or economic moat. Now let's go to the last one. And the last one is very simple. It's the network effect. And how the network effect works is that the more users the company has, the easier that the company is going to create revenue. And one example is going to be Facebook. Facebook monetizes its users. And I'm going to put on the screen so you can see the numbers and how the company has increased the revenue per user. And this graph that you see is in the Facebook Investor Relation page. Now the numbers are from the fourth quarter of 2016. And as you see, these numbers are in the North America region, and that includes the United States and Canada. Based on the fourth quarter of 2016, Facebook generated $19.81 per user. Most likely, that number will increase once Facebook announces the number in 2017. And those are the 5 economic moats that I look in a company. Now you have to keep in mind that moats don't last forever. And you have to evaluate the business of a company and think if the company has gotten better or worse throughout the years. And I'm going to ask you in the comment sections below what other things do you look in a stock before investing. And remember, you can subscribe to the Financial Information channel. I'm going to continue bringing videos about the stock market, personal finance, and how to make money online. And I'm going to thank you once again for watching the video. Have an excellent day and take care, my friends.